Hello, my name is David and I'm with DPI Trading. Today we're going to talk about another one of my favorite indicators, the Relative Strength Index. The Relative Strength Index was developed by a guy named J. Wells Wilder. Mr. Wilder was a mechanical engineer who eventually became a property developer and is considered the father of several technical indicators that are core to the DPI trading process. The RSI, as it's otherwise known, is one of those indicators. The RSI is a momentum oscillator that measures the speed and change of price movements and oscillates or moves up and down between 0 and 100. The calculation is not complicated, but an explanation could take up to several minutes. So let's just suffice it to say it basically takes the averages of upward price changes versus the averages of downward price changes. Voila. So let's get into it. This is an actual image of the RSI, or Relative Strength Index. It can show when a stock is overbought or when the stock is being traded at a higher price than what it is actually worth, and when a downward correction is more than likely going to occur, usually relatively soon. Overbought conditions can be identified by using the RSI. RSI is considered overbought when it reaches above 70 or oversold when the value reaches 30. Here's an example of a one-year view price chart in combination with the RSI. The trader can immediately identify the price levels or areas when overbought and oversold occur, as shown with the red and blue lines in the RSI chart. However, before we go further, let's clarify the meaning of overbought or oversold. Overbought basically means the market price has increased too fast in comparison with the inherent growth fundamentals of the company and is trading higher than normal. Oversold, on the other hand, means the price decreases too fast compared to the fundamentals and can potentially signal a buy opportunity. It can also indicate when stocks may be ready for a trend reversal or a corrective pullback in price, as it's otherwise known. And as the price begins to reverse, the RSI will begin to adjust lower, reflecting the price change getting back into alignment with fundamental values. In other words, when the price reaches the magical number of 70, we can assume the price is likely to reverse, and we will need to apply the appropriate risk management techniques. These techniques will be a topic of another video and is covered in the DPI Trading course book. However, there can be conditions where there may be a divergence between the RSI and the price move when looking at a longer period of time. As illustrated in this graphics, where the price did drop when the RSI hovered around 70, reversing downward to about 50, before shifting upward again when the price reached a new high and the RSI again topped 70 and the price made another reversal, even though the overall trend was upward. Depending on the approach to trading, long-term, short-term, or even daily, the RSI indicator must always be used in conjunction with other indicators. As an example, in this case, a linear regression channel, a topic for another video, has been applied to the price chart. In combination with the RSI, more information to help the trader mitigate risk can be identified. Should I stay or should I go? Always the big question. That is what the indicators can help us define. We can also add other indicators to help us decide what our actions should be. Other indicators that can be used together with the RSI are moving averages combined with the linear regression channel, as shown in the graphic. In the graphic shown, the 9-day exponential moving average, defined with a yellow line near the candlesticks, should be on top of the 14-day simple moving average, shown in a blue line near the candlesticks. When the yellow line begins to move below the blue line and the RSI is reaching overbought or the 70 value, it is time to seriously consider mitigating actions. So there you have it, the Relative Strength Index, known as the RSI. It is a great tool to use in combination with other indicators and can help the trader with making important decisions. So with that in mind, let's quickly summarize. The RSI was created by a guy named Mr. Wilder. It moves between 100 and 0. It can indicate overbought when reaching 70. It can indicate oversold when reaching 30. And it can indicate possible trend reversal. Always use in combination with other indicators. I hope this was useful. And as always, we know your time is valuable, and we appreciate you spending it with us for this quick review of the RSI. Thank you.